What's going on, guys? So today we're going to be talking about another indicator. This is the third indicator that I'll be going over, and basically this indicator is moving averages, and I'm sure you guys have heard of moving average before. People use them all the time, like on Twitter. They always talk about, oh, the moving average is here, blah blah blah. So we have moving averages, and if you're on Webull, I'll show you how to put them on. But if you're on a different broker, you can just look up a YouTube video how to use moving averages, right? So if we go to Tesla, let me take my indicator off real quick, my view up indicator, and we go up here to this indicators button. There should be an indicators button on every single other broker. We can go to the EMAs, which are the exponential moving average or just the moving averages. And I'm not really sure what makes the exponential different. Like, I think these are like slower or something, or don't move as much as the actual moving averages, because they are actually calculated a little more, like with a little more weight per se. And I don't really use these. I use the regular moving averages, and that's what we're gonna be going over. So if we go pull up the moving averages, and I don't have them pulled up right now, I have to go search them. Let's see, so moving averages should be right here. So we go to this moving average button, and we can go to the link. So right now I only have the MA5 checked, but there's multiple different moving averages you can do, and it depends on if you're like a scalper or day traders. If you are a scalper, you should use like the 3 and 9 moving average, and I'll explain in a minute why. So I just put the 3 and 9, as you can see, 3, 9. So the 3 would be the blue line, and the 9 would be the orange line. So let's click done. So now we have the green and blue moving averages on the screen, and basically this is kind of like the MACD, right? So with a MACD, let me just put on the MACD real quick. I talked about that last video. With a MACD, when we saw this yellow line cross over this blue line, that means it's in an uptrend, because this is a faster moving average than this one. So if we look and we have actual moving averages, like this is the 3 and 9, we see this blue line cross above this orange line, and this would be the 3-day moving average, and this would be the 9-day moving average. And what that means is if you see it cross, that might be confirmation to go long. And I use indicators, as I've said in the past, only for confirmation. I do not base my trades off of moving averages, but you definitely can. But it can definitely be difficult sometimes, because if you look, see how as soon as this crosses over, that would be your signal to buy. So by the time it gets up here, it's still over this line, but it goes down. So you would lose money. And basically, when the faster moving average crosses above the slower moving average, so when the 3 crosses above the 9-day, that would basically mean that this is a buy signal right here. So let me write buy signal. Oops, I don't know how that happened. Delete this. Alright, so buy signal right there. So as you can see, this would be the buy signal right there. Let me highlight that with like a shape real quick. So that right there would be your buy signal. And basically, I don't use this for like actual trading, because if you look over here, this would be your sell signal, and your sell signal occurs when the faster moving average crosses below the slower moving average. So when your 3-day crosses under the 9-day, that means that your short-term price is actually lower than the long-term price, which is not good, because you want the short-term price to be higher than the long-term price, because that means the long-term price will probably be pushing up. So hopefully that made sense. I had to think about that one for a second, but moving averages I use as confirmation, and this is something you'd use if you're like in and out of trades. So if we go back to moving averages, let's go back to indicators. We go to edit. If you are a day trader, I recommend using like the 8 and 21 or like the 9 and 21. It depends. Like it doesn't really matter. But I know a ton of people who use the 8 and 21 for day trade. So if we click the 8 and 21, we can see that this is a little longer and it doesn't cross over as fast. You see how I put buy signal right here and sell signal right here? Now we see that there is no signals right there because the signals are way more spread out because the moving averages are slower. So if you're day trading and you want to get in a day trade, and say you see, let me go to like SPY or something. So at the beginning of market open, say you see this blue line, which is the 9-day moving average, cross above this orange line, which is the 21-day moving average. So you see it cross above, and that's a buy signal right here because the lower one is, or the faster moving day average is crossing above the slower moving day average. So you buy here for confirmation. So what I would do is I would see this candle, and this is clearly a bullish engulfing candle, and then I would see this cross, and this cross would be extra confirmation. And if you look at the MACD, it also crosses, so this would be even more extra confirmation that to go along. So I want to play based on the candlestick and the price action. I check for confirmation, so I look at the moving average, and I look at the MACD. I see both are crossing over, and I may want to take a trade. And so I take that trade, and we don't see a sell signal until way up here. And by this time, the price is already up from 460.36 to 461.57. So if you're playing options, that would have been an easy 100%er, depending on if it was 0-day expiration or 1-day expiration. And if you're playing shares, that would have been a nice scalp for like almost a $1.50 move. So that's how easy moving the averages are. Some days sometimes do you see how this crosses over even though this is going up? This crosses over because of all these red candles right here, so it kind of resets itself. So that's why you do not want to use moving averages just to determine trades, only confirmation. Because say you went short right here, and because you saw it curling under, you would have lost a trade because this is going up. So generally I only use them for confirmation. And if you guys are like swing trading, I like to have the 50 and 200 day moving average in my chart. You probably hear about those a lot. So if we go and put the 50 and 200. All right, so, and usually the 200 moving day average is often used as support. So this would be the 200 moving day average line, and then this would be the 50. And if you guys look at other stocks, when we see the 50-day moving average go above the 200-day moving average, that would be a good swing trade to take, because usually when these crosses happen, it's not like that choppy, but we can tell here. Ready? Look, so we see this go up, and then we see it cross below. Actually, that follows the trend well. So what I'm trying to say is, remember how I was showing you guys the other chart where it crossed below, the faster moving day average crossed below, meaning to go short, but the trend was still in an uptrend. If you guys are looking at the daily chart of like these 50 and 200 moving day averages, they generally, for the most part, don't do that. They usually are actually respect the trend pretty well. So let me take off these ones so it's not as confusing. But if we look, this moving average crosses below and it's in a downtrend, and then it crosses above, it goes in an uptrend, and then it ends up almost going down again, but it's still in an overall uptrend. It never goes below this number. It's still an overall uptrend. And then finally, when it starts to curl down, as this is in a downtrend. So we can see right here how this goes down and this goes up. And these situations are much rarer with these higher moving day averages. They are very, very common with the like the 9 and 21, using those on like day trades on the 5-minute chart. But 50 and 200s are good, and also these moving averages can act as support or bounces. So we see this is the 50-day moving average on Google. See how it bounces right off this 50 moving day average? That would be a nice time to take calls or shares. Again, bounces right off there, and then we see it gap under the moving day, under the 50-day, and it ends up going down a little bit. So that'll been a nice short to take. We see the 200-day moving average right here act as support. So these levels are respected pretty well. I really like moving averages. I don't use them like for my main confirmation. I usually use VWAP and a couple other indicators to go over, but moving averages are very handy in many situations. I know a ton of good traders who use them, and overall, make sure you guys try to use this. And by the way, all this information I'm giving out, you don't have to use. It's just for you to know, and then you can choose whatever strategy you like best. So this is just another one you can pick, and it's important to know. So that is that. I hope you guys enjoyed the video. Make sure to use my Webull referral code. The link is in the description. Join my Discord. Links in the description. Ask me questions. Like, subscribe, and share. Tell your friends about me and this channel if you guys want them to learn. And other than that, have a good rest of your night or day wherever you're at, and peace out.